this gigantic thing in the middle. And for some reason, we have lost Warwick, I think. You snooze, you lose. No, just kidding. He sacrificed himself so at least one of us can do this. And unfortunately, he is the brains and I'm the bronze, okay? So give me a second to try to get this gigantic icon off my screen, and there it is. All right. Let's get right to business. I had mentioned that I would like to share a standard tool found on the MT4 platform. It is called the Fibonacci channel. And if you can really see my screen, I will show you how to activate if you are not familiar with it. We would hit the insert button, tab on top, channels, and then Fibonacci. That would bring up the tool on whatever chart you are using at the time. Let's do that again. Okay, you see the cursor here. And this is comprised of a requirement that we identify 3 points on the chart, and we'll call that ABC points. I have example actually on US Swissy, and this is point A, this is point B, and this is point C. So let's highlight the tool itself. It has 3 dots on the top and 1 dot on the bottom. So you would align point A to the dot on the left, point C to the dot on the right of the upper plot line, and drag that second plot line down to point B. So your point A in this case would be the high, which is the May 17th high, and point B would be the May 20th low. So that's your AB. What we're doing with this tool is to look for a trigger zone to trade the retrace of the move from point A to point B. So therefore, the retrace point would be point C, where this arrow is. And in my experience, the trigger zone between the 78.6 and the 88.6% retrace Fibonacci levels is a very good point for retrace. Let me read the comments before I go further in case people are having problems. Somebody invaded here and is pointing to an arrow. I am doing great. Okay, fine. Let's continue. I'm the bronze, remember that. Okay, here's the entry point. The entry zone is 78.6 to 88.6% retrace level. Now, some people might want to take it all the way up to the 100%. That's fine, but you have to have an idea of your risk reward. So if we trigger, let's say, between the 78.6 and 88.6, yes, you can have the stop loss just above the 100%, okay, which is a full retrace. And you would have to calculate where you want to take a profit in order for your risk reward to be at least 1-to-1. It should be more, actually, okay? So the interior levels inside the 2 plot lines is very important and can be adjusted. Now, I use my own ratios, which are not Fibonacci numbers, but if you want to use Fibonacci numbers, they would be 38.2% for the first level, 50% for for the second level and 61.8% for the third level. What I do is when I program this, and I can go right into the instructions on how to program it, but let's look at the chart for the time being. I have found that the ratio of 31.4% is very, okay, I have a question here from Alan. Is it, somebody's pointing an arrow. Okay, well, if you have a question, yeah, put it up on chat and I'll try to flag it down. Otherwise, it could be a false alarm. Okay, if we look on the chart, and I can zoom for you guys, the first level I have as minus 68.6. The second one is the same, it's 50%. The third one is minus 31.4. Now, you can't take those numbers literally, but there's a method to that madness for levels. What I'm trying to say is that in between the two plot lines, you're going to find support after the market moves 31.4%, okay, from point C, 50%, and then moving 68.6%. But that doesn't fit with the labels, and I'll explain why. And the reason these numbers are the way they are is 31.4% is pi times 10. Okay, pi is, of course, pi is 3.14%. So when I started experimenting with this ratio, I found that the market respected this ratio even more so than the Fibonacci derivative of 38.2. Okay, so write that down, 31.4. The reason I use 68.6 is because that is the number derived from 1 minus 0.314. Okay, let me repeat that. 1 is 100%. That's the entire distance from A to B. Okay, Warwick is saying when I move the screen, it takes 1 second to catch up. Okay, I'll go slower. From point A to point B is 100%. So if 1 minus 31.4% of that, or 100 minus 31.4% equals 68.6. So that's the balance, and the reverse is true. So that's why I use those two numbers instead of the fib numbers of 61.8 and 38.2. So that's important for me. I think that as I go, you'll understand why I'm doing this. But let's get into the programming, the ratios on this indicator. So all you got to do is right-click one of the dots on the fib channel tool, and it'll bring up a display where you can change the ratios. Okay. So the left hand, under the fib levels tab, the left-hand column will have your ratios that you need to input. So you double click on it and you can change that number. Okay, I forgot what the default is, but it was probably a fib number because this is called the fib channel. So I changed it, and you have to remember that to have the program or to have this tool plot properly, it has to be minus 0.686 to arrive at the first level here. Okay, if I typed in minus 31 or 31.4, it will not even be between the two plot lines. It will be above or below it. I forgot which one. Okay, so just because of the way this was designed, I was forced to use that ratio. Okay, and the same is true for minus 31.4. It's designed with a 0 start point at point B, okay? That is 0 for the program. And as you go negative, it'll go negative upward in numbers this way, okay? But for our purpose, this is the way we have to program it. Now you can label it anything you want, but I labeled it the same as uh, how I programmed it. But what I'm trying to point C, when it retraces downward, the move is actually 31.4%, okay, of the distance between A and B, but in a diagonal fashion, okay? So this is where it differs from your standard Fibonacci retracement tool, which is completely horizontal. The fib channel tool allows you to move diagonally and see things from a diagonal standpoint. Okay, and this wasn't bad. I mean, the market was very strong and it pushed through the first two levels, and then it respected the third level, which was a move of 68.6% in distance as far as the retrace. Let me move to another currency, and let's pick euro dollar one. Um, the yellow channels actually a standard deviation channel, which is also standard on the MT4 platform. And this is the icon up there. You can find it in the same area under channels. And instead of Fibonacci, you can click on standard deviation. Okay, the reason I brought this up, and not to try to do too much at the same time, is that I often use the fib channel to align with other support and resistance tools. Okay, in this case, I'm aligning it to the standard deviation channel. Okay, this deviation channel is set on 6, but the standard is 2, so let's revert back to 2. Okay, and let me move the alignment for now, so I don't, so I can start from the beginning with you guys. Probably. Okay, what I did was I took the two highs, okay, of May 2nd and May 8th. The screen catch up because I understand there's a lag. And the yellow plot is what the standard deviation tool automatically draws. Okay. Then I applied the fib channel tool and aligned it to the high and low channels. Okay. And from there, I drag the whole thing down to the lower channel to make a double channel. Okay. So what we're trying to say is you can use the fib channel tool to identify a 100% expansion of the standard deviation channel to trade a bounce. In this case, it would be a buy. And I have this gigantic arrow marking the spot there. 100% expansion of deviation 2, which is a deviation ratio that we use for that plot. And if you moved it one more level down, that would be a 200% expansion, which also produced a bounce on May 15th. Okay, so you had a bounce at the 100% expansion and the 200% expansion. Now let's go back to the standard deviation properties and change the deviation to 6. I'll tell you why in a second here. That plots the standard deviation's lower channel at the 100% expansion. Okay, remember this arrow there? Okay. So now what we can do is align our fib channel to this new space here. Pull it down again and see what we got. Okay. Okay. So you have a 50% expansion of deviation 6, which occurred on May 17th. So that's another way to trade a bounce right there. And bounced, look at that. It retouched the lower channel there of D6, okay, D6LC, okay. And traders can trade the sell off of that. It declined in a strong manner and retouched the 50% expansion of D6 again, okay, and bounce right back up. So the market is moving in a diagonal channel, and this is another way to identify support and resistance by using, in this case, two standard tools found on MT4. Your standard deviation channel, and then aligning your fib channel to that. Okay. Anybody see that? Okay, Warwick says cool. Okay. The brains approve. Okay, so let's check out another pair. And for the Aussies down under, we have Australia dollar 1 hour on this chart. And I didn't do anything fancy. Once again, the yellow is the standard deviation channel. And it's aligned to the two lows this time of April 15th and April 18th, 0100. April 15th, 2000 hours, and April 18th, 0100 hours. And the yellow is the two deviation plot where we aligned our fib channel 100%, the full distance of the channel, in other words. We moved up to see what we got, and where it retraced at the 50% expansion, but did not retrace much off the 100% expansion. So obviously, you were unsuccessful at the 100% expansion level this particular time. I did want to show you that nothing is 100%, but you can see adherence to the support and resistance zones. So I just moved that and messed things up. Let's replace that. Lock it in. Okay, so let's move a little further in time. And what did I have here? Okay, well, that's just more examples, but I have to wipe out the earlier plot so we don't get confused. Okay. Okay. And we're taking the two highs of May 3rd, 1900 hours GMT, and May 9th, 0200 hours GMT. Standard deviation set for 2. And you had a quick bounce at the lower channel on May 9th. We aligned our fib channel to look for an expansion to the downside. And you see the adherence along the minus 68.6 level, which means it's traveling 31.4% to the downside and respecting that support, and also respecting it at the 50% on May 16th and the last level of minus 31.4% on May 17th. To those support levels. Okay. If you use those ratios, you will see how they are respected very nicely. And subsequent, and this is 1 hour, so you're going to get a lot of fluctuations. So subsequent movement shows really brilliant adherence to these support and resistance. So you see the channel movement within the support and resistance as per our plots. Okay, so that was Aussie dollar people down under. Another way we can use the alignment of the fib channels is to align it to the Andrews pitchfork. Okay, now there's an indicator called auto pitchfork, and it automatically plots pitchforks. Now, people that are familiar with plotting pitchforks can do it themselves, obviously, and most often it would be better than some of the automated ones. But just for a display, I've put it on this pair, British pound dollar 4-hour chart, and you see 3 pitchforks here. Let's see if there's any questions. Okay, none. So we can bring up the fib channel again and see what we got when we align it to the green pitchfork here that is sloping up. Okay. If there was any bounce off the 100 expansion, and there was. Let me put an arrow right here, right there. You guys see that? Give you guys a second. Is that pitchfork a standard indicator? No, this is a special indicator for the bronze traders, and I will leave it with all of the groups, or you can Google it and find it. It's officially called auto pitchfork, FARX, auto pitchfork, forks. Okay, I'll make sure every site has one. Okay, so the green pitchfork did produce a 100% a bounce at the 100% expansion, and it traveled 31.4% of that distance, diagonal distance between the two fib channel lines. Okay, that would be the minimum take profit in my scheme of using certain ratios within the plot points. Okay, so that was perfect. I mean, you can't get better than that. So let's, and sometimes the slope is really too great. So not every plot is going to be great. Beware of that. Let's check another pitchfork while we have this. Try to align it with the very steep yellow pitchfork. And drag it up to see if there's something at the 50 or the 31.8 or whatever. Okay, it was a 50% expansion off the yellow to the upside. Okay, and I'll try to put an arrow up there. And you see how it respected the next level, 31.4, before a strong move to the lower channel where it bounced. and back down again. So all these levels are being respected. By the way, I have a 12.5% stop loss outside of the channel for certain types of trading. So that's the outer line that you're seeing. Why do I use 12.5%? Because that is a GAN, a WD GAN ratio. That is 1/8, okay? And if you use that, you will see so often that the market respect that ratio as the stop loss. That's a little hint there. That's from my commercial side of things. Okay, so that's two pitchforks. Now let's get the red one. I mean, that's still ongoing, but you guys can plot this and save it because sometime next week it can happen for you, you know. It's almost a straight diagonal anyway, but you can drag this up or down, okay, and trade the 50 or 100% expansion off of this pitchfork. And somebody texts here, oh boy, okay, 12.5, GAN secret, right, right. Let me give you guys a hint. The market moves in segments. Find out what those segments are and how you can manage your money, money management, including stop loss, and you have then cracked the secret code of W.D. Gann's law of vibrations. That's all I can say on that point. Let me now demonstrate this on and indices actually. Well, let's go for gold first before we get at. Here's a weekly chart of gold, and blow this up a little bit here. Let the chart settle down so you guys can actually see it. We have a point A for September 4th of 2011. Point B is December 18th of 2011. And you have two touches. I mean, you can actually say that February 26th was the 68 point pullback. I just happen to have the second time it hit, which is okay. Actually, it's the third time. Look at that, 1, 2, 3. The reason I took the third was because in trendline trading, that's where a lot of the triggers occur the third time it hits the trend line. So in this case, we have a diagonal plot with the fib channel tool. And I call this the fib channel triangle, by the way. It's A, B, C. And this is not in the trigger zone between 78.6 or 88 and 88.6, but rather at the 68.6% level. Now, most traditional fib traders use, like, once again, 61.8. And it takes those guys a long time to make the change. And it's so close that, you know, I don't even sweat it. But I prefer to use 68.6. And as you can see, look at the compliance. It traveled 31.5% and bounced. So that's your first take profit level. 50%. Once again, beautiful adherence. Slight pause at the after traveling 68.6%, but the move was so strong that it blew right by it and went just beyond the lower channel. There's your 12.5%. Look at that. It did not exceed that. Okay. So if you're trading the bounce off the lower channel and use 12.5% as your stop loss or thereabouts, you were safe. That yellow line is also another confirmation of support because that was previous pivot low from January 23rd. So this was a very good trade. You could have entered at the lower trend line and have your stop loss right there, which was basically 12.5% below the channel. Trade one level up. Okay, what's your risk reward? Okay, what's 31.4% divided by 12.5%? That's your gross risk reward. Okay, 31.4 divided by 12. Your stop loss is 12.5. 2.5% gross risk reward after your spread and after cushion. You know, if it's a large move, it's going to be a 2-to-1 risk reward, and you can't argue against that. That's great. Even if you win half of those trades, you would still be in profit. Okay, that's the whole point with risk reward. You don't have to win 80%. And the beautiful adherence to the support and resistance ratios inside of the fib channel, as well as understanding the Gann ratio for your stop loss. That would be the tightest, in other words. Okay. Let's see. Do I have any questions? Any questions so far with this tool? Dow Jones. Dow Jones is up here. We have ABC. That might be. I'm going to check on the Fritz. Yeah. A would be the high of April 11th. This is a 4-hour chart. B is April 19th. C is April 29th. How did you pick the A and B? Okay. Well, it's just a move that you're looking for a retrace of. Okay, it can happen anytime. But as you see, when the market is going strong, as it has been since in May, there's no retrace. It's not even close to our trigger zone, right? So there is no triangle. Okay, in the 4-hour, time frame. So when it's that strong, yes, you do have to drop down in time frame to get any kind of pullback. Boy, my system is really freaking out right now. I don't know why. Okay, I thought maybe somebody had a question. Okay, let's continue here with the Dow Jones plot. We were just sitting there waiting for a pullback, and it stopped right at the 88.6% level, and the decline was almost exactly to the minus 68.6, which again means that it traveled a distance of 31.4. Okay, and that would be your minimum take profits. So your risk reward was about 2-to-1, and it hit almost perfectly. Okay, it bounced up and eventually broke trend line AC in breakout. I mean, people would trade the breakout, as well. So that's the example. Here's the FTSE, okay, for the UK participants, and a nice support level at the minus 31.4. You can see the retrace was not quite at the 78.6, but in some cases, when I align my fib channel point C to the exact location of 78.6, the market will adhere to the interior ratios thereafter. Okay, in other words, in this case, I'm not point C to the actual price, the peak of the retrace, let's call it. Okay, I aligned instead to where 78.6 is supposed to go. Okay. I can't make a stick there, but I had it for a second. There it is, roughly. And from here, if you get a couple of confirmations, it's better. Okay, right there. If I see that it's moving and it's conforming and doing everything that I'm just gonna have to hold it there. I see that the compliance is excellent at the 50% level of that plot that I can't hold. And it bounced around between the 50 and the 68.6 during April 15th through April 16th, 17th. Together with the compliance from March 13th, March 18th, March 21st, 25th, March 27th, you can trade the bounce on April 17th off that same level, which is the minus 31.4. So this is just another form of using this tool and looking for compliance. If you see compliance using it this way, then you can go with it. Okay? So that was fantastic right there. The market's telling you what it is adhering to diagonally. So if you identify it, you can trade it. Okay? So the trick is identifying it, and the fifth channel allowed us to do it in this particular example. We used the unorthodox way of making that plot. Okay? And last, we have the NASDAQ 100 index here. And in this case, the retrace was 88.6%. And the adherence to all the interior levels, well, actually the first two was good. It blew by the third one in a very strong move, but you had to play at the lower channel, which is plot line B for a buy, and that was a nice move there. Okay, so you have several different examples from the stock index to gold to currencies. Okay, so this works on everything. Let's see if there are any questions so far. Okay, why is the upper, okay, good question, John. Why is the upper stop loss on my fifth channel minus 112.5 as opposed to just minus 12.5? Excellent question. You know, it's just fifth channel tool. That's the only way you're going to get it to display. Let's see if I can eliminate some of these lines on this example. Go right to it. Okay. Remember when I said that the program starts counting at point B? That's the lower plot line with the one dot as opposed to the upper plot line with three dots. That's where it starts counting. You can see it counts minus 31.4, minus 50, minus 68.6, and the upper trend line is minus 100. So the distance between this and your stop loss is 12.5%, but it has to be inputted as minus 112.5. It's just the way the program counts when they designed this tool. Okay, It took me a little while to figure that out, but eventually I got it. And when you're counting down, it's positive numbers, okay? So if you wanted to, you can even plot a 100% expansion by, the input now. Right click here, um, hit add, and just put in 100. Okay, so this would be, we can label this 100% expansion. Did that right? Did that right? How did I do 12.5? Okay, it has to be a decimal. It has to be 1. Okay, there. Still didn't have it. Okay, so it's just the way it counts. If you're going up, in this case, it would be negative numbers. Going down would be positive. Now, if you reverse this, okay, it's the other way around. Okay, if we went like, for instance, it was upside down. Your 112 is on the bottom. That's just the way it counts. Okay, and it depends on where, how it's pointing. Okay, the channel, and that's just the way they programmed it. But good question. Anybody else? Okay, oh boy, here's a tough one from Moses. Can you use it in an, okay, here's the other channel that Moses is referring to. If I can get a fresh chart, I'll scroll back on this one. We can bring up another type of channel. If you go into the channels and click equidistant, this is got the same type of plot line as plot lines as the fib channel. And is it redundant, right? Now let's see what the properties. Okay, there's no properties. So you can use it, but I don't see any advantage over the fib channel. It's just 2 lines sitting there, you know. Maybe somebody knows how to use it better than I do. I've never figured out what this has to do, what this offers more so than your regular fib channel tool. So I think you can probably find it under the help topic, Moses. Okay. Somewhere along there, you should have your tools. Okay. Look it up, and if you figure, share that with us, Moses. Somebody wants to wrap it up. Okay. Warwick, thank you, sir. Thanks, everybody, for coming.